Good morning, ladies and gentlemen. Welcome to the Bushveld Minerals Limited investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time using the Q&A tab just situated on the right-hand corner of your screen. Please type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and we'll publish those responses on the Investor Meet Company platform. Before we begin, we'd like to submit the following poll, and I'm sure the company will be most grateful for your participation. I'd now like to hand over to CEO Craig Coltman. Good morning.
Good morning and welcome to the Bushveld Minerals Q2 and H1 2024 operational update call. Thank you for joining. As set out in the Bushveld's Q2 and H1 2024 operational update released last week, the company continues to rationalize assets by cutting costs and reducing headcount, as well as making progress on the turnaround initiative at Vametco. The program has already seen improved production volumes and increased stability despite supplier challenges. Stabilized power supply following our agreement with the local municipality has enabled steady production. As a result of these measures, the outlook remains positive for the remainder of 2024 into 2025. Diving into the numbers, I'm pleased to report group production of 838 mtV for the quarter and 1,693 mtV for the half year, with the month of May at Vametco alone accounting for 217 mtV of these figures. This is the highest monthly production at Vametco since I joined a year ago. This is evidence to the success of the turnaround project we have undertaken at Vametco, now our core asset, and in spite of hindrances of cash constraints early in this year and the 25-day planned maintenance shutdown in January and February. These initial efforts and a number of other initiatives identified at Vametco, which will be executed in the second half of this year, put us on track to achieve our overall target of 240 mtV monthly sustainable production at Vametco by Q4 this year. Group cash costs for both the quarter and half year were $27.30 per kilogram and $27.90 respectively. This was primarily due to the higher cost of raw materials, lower production volumes given production constraints at the start of the year, and maintenance costs. With the strong production figures resulting from our turnaround strategy, as previously noted, Vametco's costs are expected to reduce during the second half of this year, and we are targeting a weighted average production cash cost for the group of $26.70 and $27.10 based on the group production guidance of between 3,800 mtV and 4,000 mtV. Sales were down this quarter and across the half year with 759 mtV and 1,639 mtV respectively, owing to lower production volumes and the depletion of inventory. We continue to prioritize sales into higher value markets, including the aerospace, alloy, and chemicals, particularly that of North America. I would also like to note that Bushveld has seen a significant decrease in total recordable injury frequency rate of 2.87 over the quarter, down from 7.53 last year, and 1.3 for the half year, again a significant improvement of 60% from the 3.39 in 2023. This is testimony to increased control and health and safety measures now put into practice, following the implementation of the safety diagnostic audit, which identified leading indicators. I'm pleased that we have continued to rationalize assets during the period too. While no definitive agreement is yet in place, we have entered into discussions with our joint venture partner, the Industrial Development Corporation, to transfer ownership of Belco for a notional amount, including the total liabilities of Belco and a guarantee provided by Bushveld of circa $1.5 million. We've also received approval from the Development Bank of South Africa to proceed with the disposal of Limor and the outstanding debt of $2.5 million on the asset. However, this is dependent on a couple of outstanding conditions, namely creditors being met. Following shareholder approval in June, the process of sale of Vanchem is now underway, and we await approval from the Competition Commission, which is expected by the end of October 2024. Assuming Vanchem's production is excluded for the last 2 months of the year, with Competition Commission approval at the end of October 2024, total year group production guidance will reduce by 400 mtV as we exclude Vanchem from total production. Additionally, we have also entered into revised agreements with Orion, in which they have agreed to provide further funding, matching funds paid by SPR. As you can tell, it has been a busy period, and we are looking forward to progressing our asset rationalizing process and our turnaround projects at Vametco during the rest of this year, positioning ourselves to become a simple, fast, and effective business. I will now stop to take questions.
That's great, Craig. Thank you very much indeed. Ladies and gentlemen, please do continue to submit your questions just using the Q&A tab situated on the right-hand corner of your screen, which is why the company take a few moments to review your questions submitted already. I'd just like to remind you a recording of this presentation will be available post today's session. We did receive a number of questions ahead of today's event. In fact, the one question which reads as follows. Across the border in Zimbabwe, the steelworks named Muvumba have now commenced operations. It is stated that it's the biggest steelworks in Africa. Could Bushveld Minerals secure a contract for vanadium pentoxide across the border?
Yeah, not sure who gave that question, but it's a good question. Well spotted. Look, they've only started their production of carbon steel just a few weeks back. The vanadium demand, if any, will depend on the type of products that they're planning to produce and during which phase of their project. So once we understand what this really means, we'll work with the team in Muvumba to determine what the vanadium requirements are and how we can assist.
That's great. Thanks very much indeed, Craig. Look, that's the pre-submitted question out of the way. Obviously, you've had a number of questions from investors. So firstly, thank you to everybody for engagement. Craig, if I may just hand back to you to read out those questions where it's appropriate to do so, and then just hand back to me at the end.
Yeah, certainly. Looking at the first question here from Bradley. Craig, will we see any more asset stripping ahead, or have we now met our slimmer business structure? So once we've got Lemur formally out the stable and Belco and the last of the energy assets, that's the end of the asset stripping. But that doesn't mean to say we've got to the lean position we need to be. Vametco itself has got 12% more labor headcount than it requires, and the corporate structure, I've got a plan that's going to take out a significant section of that corporate structure to reflect a very lean support structure for one asset. Hope that answers the question. Could you elaborate on the specific initiatives being executed in the second half of the year as part of the turnaround plan at Vametco to achieve the target 240 mtV monthly sustainable production? Yeah, certainly. I was out there last Thursday for the day. So let me focus on what's already been done to derive the initial benefit, despite all the cash constraint. The first start is just getting back to basics. Making sure that the operating procedures are aligned with the OEM original setup. Often you find new staff come in and they tinker with things, and you got to refresh that. We've been training operators to make sure that they're in compliance with these operating procedures. Fundamentally, that's all we've really done in the short term, just to get back to basics and make sure the guys deliver on executing to the OEM specifications, if you like, and some training. Some of the other initiatives that will bear fruit, the obvious one that is sort of line of sight that's going to increase our online time and ultimately our yield is critical spares. I mean, I was sitting with the supply chain guys in the offices and looking at their minimum stock order levels. It's rock bottom. We have absolutely zero critical spares. So that's nearly $1 million worth of critical spares that we're going to hit the reset button and get the stock levels up to an acceptable level, so that when we do have a maintenance planned or otherwise, it'll take a few hours to get the equipment up and running, rather than going into town and losing 2 or 3 days. So that's an obvious line of sight benefit that is critical to get us to the 240. Then some of the initiatives that will assist, but are more sort of longer term benefits that will increase opportunities. Or I've spoken about the headcount reduction. That in itself doesn't have increased throughput, but certainly helps the bottom line. We've identified various raw material consumption that is excessive to the standard. For example, we should be getting. We shouldn't be buying any AMSOL at all. It should be going. It's a byproduct of the SRP, and then it goes back into the precipitation process. A very, very expensive raw material at that, I must add. So we are spending a lot of money and a lot of time on quantity of AMSOL to feed into the system. The SRP should be delivering that on its own, not having to buy outside. Then we're also picking up the silica content is higher than what it should be. It's running at about 2.3. It should be marginally below 2 to get the kiln to run at optimum efficiency. We believe that some of the settings on the mill aren't as exact as it should be. We should be letting through more finer configuration on the mill. That on its own will reduce the silica, and that on its own not only does it reduce the reagent mixture required, but actually improves the yield efficiency somewhat. We know that for every 1% improvement in yield, you add an additional throughput, which results in $500,000 per annum. So all of those initiatives are underway, and some are more obvious and line of sight than others. But those are primarily the focus areas that will address not only the cost reduction, but the increased probability of the online time we need on the assets, and then ultimately delivering on the 240 MTV. Scrolling down here, another one from Bradley. Recent emerging news is showing the United States is heading to a recession. Is this likely to risk our sales in the United States? Oh, man. The vanadium consumption in the steel is so small relatively in the bigger scheme of things. Who knows? But I'd like to believe unlikely. But on the flip side, we've heard about the new Chinese legislation on the rebar, which my intel from a very reliable source. I talk to the Wogan guys a lot. They're a good bunch of guys, and they're very insightful. They've got some good insight. You can read anything between 15 and 20% improvement in the requirement of demand in that area. Now, I know we don't sell to China directly, but it does have a knock-on impact over time. So yes, that could be, but I don't think it's going to make a significant impact on our product. We've never ever since I've been here, and when I look back on the records, had a problem with demand. Another question here from Andrew. How does the revised agreement with Orion and the matching funds from SPR impact the company's financial stability and liquidity in the near term? Well, look, we passed the going concern test, but I think Robbie, our CFO, is with me. He can give a little bit more color to that question.
Yeah, thanks very much, Andrew. Technically speaking, it was actually SPR that advanced the funding, and then it was Orion's matched funding. So that was the basis upon which they provided the matched funding. There were certain deferments in terms of capital and interest repayments that Orion conceded to, which only start now in December 2025. The impact of the receipt of the cash from both parties is obviously highly positive on our cash flows. And of course, it helps us to catch up with the payment of creditors, the procurement of critical spares, and the essential maintenance that's been required on these assets due to the sort of like the breakdowns and things that we've suffered. This is all will impact the ability to not only meet our payments as they fall due, but actually increase the production as well and have some more stability on the production side. So very, very positive developments on that in every way.
Thanks, Robbie. There's a next question here from Peter C. Is there any need for additional fundraising in the next 12 months? And how would this funding be deployed? Well, as I said earlier, we passed the going concern test on what I believe a reasonable set of assumptions. I'd like to believe. Well, let me go back a step. If you think of the timing of those financial statements and the going concern test, subsequent to that, we've learned some more positive news that wasn't around at the time. In terms of the rebar standard at the end of September, there's no racing certainty in this game. If for whatever reason price was to deteriorate further, unlikely based on the intel we're getting, then our going concern is at risk for the next 12 months. And if that was the case, we'll have to apply our minds and think of whatever options there are available. I don't have any thoughts around what that could look like at this point in time. Next question, it says, it's interesting to hear of efficiency creation in corporate structure and 11% overstaffing. What are plans and timelines for this, and what impact is assessed on eventual production costs? Brilliant question. Absolutely brilliant question. So, I've been doing some reflection on some of the cost base of this organization. We go back to 2018, we made over $100 million EBITDA, and then that was at $73 a kilogram. In 2019, that was a bad base year. We increased the headcount to just 540 odd people. We're currently around about 470 odd. This is the problem of business. When you have a fantastic year like that in 2018, the business grows, not necessarily for additional value accretion, but the cost base goes up, the headcount goes up, and all that sort of stuff. So that's where it was. We're running at about 455, 460 today. I can't comment on why it was like that in the past. What I can do is look at what you would typically need to run this business efficiently. And the number is probably in the order of round about 400. And that's what we're going to work towards. So that's where we are. In terms of the corporate staff, don't forget, we used to run two assets over here. When I got in here in July last year, we took about 2 or 3 months and we started to right-size the corporate structure. We took about 20 individuals out. That was to support 2 operations. A lot of that support center is to do various reporting, various support services, whether it's finance or environmental and a host of other. We really don't have very sophisticated systems in this organization. So that doesn't, it's pretty manual setup. So a fair amount of that resources was compliance reporting and various ESG reporting and financial reporting, which we don't need for one asset. And that's what's going to prompt us to reduce the headcount accordingly. The time frame of that is, look, we need let's break this up into 2 projects. The first at the operations. There's nothing stopping us actually engaging, which we have with the CCMA, to start assisting us with the facilitation of the conversation, particularly with the union members at Vametco. So that there's no constraint there. We'll kick that off in the next week or so. In terms of the corporate structure, a little bit more tricky. We have got to make sure that we get Competition Commission approval to sell that asset. And as soon as we've got that out of the way, then we can trigger what we call a Section 189 at the corporate center to reflect a much leaner structure to support the one asset. So we've done all the work, or the primary detail work around what it looks like. The triggering of that will coincide with competition commission approval, which we believe for now our intel tells us the end of October. Right. I don't have any more questions in the queue.
That's it. No, you have taken all the questions that have been sent through to you there, Craig. So thank you very much indeed. And if any other questions do come through, Craig,
I just hold on before. I didn't answer that question in what impact it has on the production costs. So we've done. I spoke to you about those various initiatives. Some were cost reduction, some were efficiency in terms of yield. The one initiative I didn't mention today, but I have mentioned before, and is we've got a project underway to increase our spend on contracts rather than once-off orders, and that's going to result in a significant reduction in cost, and of course the 3% we believe increase in the yield. That's from the beginning of the kiln to the end of the finished goods. That's $1.5 million. All of that is in the order of $9 to $10 million, which is about $4 a kilogram on our C1 costs. At around 2,500 per MTV. So hope that answers the full question. Thank you.
Thanks, Craig. Thank you, Craig. If any questions do come through post now, obviously we'll make those available and we can add those responses as and when, if that is needed. Craig, Robbie, I know investor feedback will be particularly important to you both. I'll shortly redirect those on the call to give you their thoughts and expectations. But perhaps before doing so, Craig, I could just ask you for a couple of closing comments.
Yeah, certainly. That's certainly the quickest session I've ever had since I've been here. Not many questions, but thanks for those questions and the time. I'm pleased that to report, that the operational and safety procedures are now being reflected in our production figures, and that Vametco is performing much stronger. And I can't emphasize this enough. And that's despite current and significant ongoing supply challenges. But this is a good sign. So I look forward to giving our shareholders an update at the close of the next quarter. Thanks very much for your time. Bye now.
That's great, Craig. Robbie, thanks once again for updating investors. I could please ask investors not to close the session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. So it'll take a few moments to complete, but I'm sure it'll be greatly valued by the company. On behalf of the management team of Bushveld Minerals, I'd like to thank you for attending today's presentation and wish you the rest of the day.